Good morning, everyone. Just wanted to do a real quick video, look at some of the indice charts, and update a couple of plays we're in right now, going into the new week, just to see where we stand and what my thinking is for the next couple of weeks into January. Looking at the Dow daily chart, this is a one-year time frame. You can see we're still just below this downtrend that's been in place since the May top. Really crazy couple of days that we've had. Big sell-off on Thursday after the tragedy in San Bernardino, which is really weird because typically after an event like that, the markets rally back. But then on Friday, all that losses that we had on Thursday, plus some, totally erases. The market roared back. Big story really is Fed raising interest rates. The market seems to want that to actually happen. We're going to find that out in a week's time. Next Fed meeting is December 16th. Now, on Friday, the real reason the market doubled, we're actually up pretty decent. The jobs report was okay. The headline number was good, but if you dig into it, it was really another crappy job. We're losing high-paying jobs and replacing them with waiter jobs, low-paying jobs. But the Fed seems very intent on pushing that rate up. Reason the market really tore up on Friday was Draghi, the ECB head, essentially in layman's terms came out and said whatever liquidity the Fed's going to pull out of the system with their quarter-point increase, the ECB is going to put back in. And the market took that as a green light to rock and roll. Looking at the 15-minute chart, you can see the resistance level here. 17,900. I would say 18K, and you'll really start to see the shorts go into a little bit of a panic mode and cover mode. Here's a tightened up view. Now, back in August, we broke down below the 50-day moving average, and you can see what happened after that. We ended up hitting the new lows shortly thereafter. We've recovered all the way back up, and we're probably maybe a week or two, definitely by January, looking at a golden cross, and that's when the 50-day crosses up through the 200-day moving average, a bullish event. But you can really see here, we are right on the cusp of a pretty big breakout. Now, the one bad thing that's out there is the Dow transports continue to suck balls. There's no better way to put it. You can see the resistance level. It is unable to break the 200-day moving average, and while we're only 400 or 500 points away from new all-time highs on the Dow, the transports are, look at that. I mean, we are 1,400 points, 1,500 points away from a new high in the Dow transports. That's like, 10, 12, 13% still to the upside. Now, the positive view to take on that is, look at all the momentum we're going to get if and when the transports do push to a new high. But you need to recall, over the last 4 or 5 years, it's been the Dow transports that have led this market. So while we continue to see weakness here, we really need to see the transports break out above that 200-day moving average over the next couple of weeks. Now, the indice for, this is the microcap index. This is the one we've been paying pretty close attention to because this is the sector of the market we play the most in, IWC. You can see it is coiling underneath the 200-day moving average. We've got a little bit of a symmetrical triangle going on here. It's the first one, second one, third one hopefully breaks it to the upside. And this is the time of the year where small caps and micro cap stocks outperform. We've had some great mania over the last 3 weeks. It paused a little bit this week, and given the extreme action we were seeing last week and into Monday of this past week, not a big surprise. I mean, plays were ripping left and right. We need a little bit of a consolidation and then another push higher. And we actually started to see that on Friday where some of the recent big movers like GBSN and NETE bounce back off their sell-offs, and we jumped into a stock. We'll go into that in a little bit because of that, and that is a good sign. I like seeing that. There is still some residual tax loss selling out there. Now, typically, the tax selling reaches a peak in the next week or so. Usually when, we talked about it starting earlier this year, but there's always some more, there's always someone who's waited till the last minute looking to sell and they're looking at their tax and going, you know what, maybe I need to sell. That usually reaches a crescendo in the next week or so. So stops need to be a little bit tighter on plays that are still trading around towards the bottom, because out of the blue you could see a tax loss selling drop. Now those extreme dips also should be on watch, because those kind of dips can give very, very nice bounce opportunities. Usually fundies throw in the towel at the bottom, and so do a lot of retail investors. And those extreme drops that if you see them, we're paying pretty close attention to, especially if they're towards moving averages for nice big bounce backs. As for stock plays, sent out an alert on CLRB on Friday, highlighting why I thought this was a strong takeover candidate. There's been a lot of rumors floating around from Skrelly. He took K-Bio from essentially 40, 50 cents all the way up to, $40 over the course of a few days. Said he was going to be looking to pick up 3 new companies. He announced a private company purchase on Thursday after hours. These guys are a perfect match. They need cash by March of next year. Deep cancer pipeline, easy to take control of, very, very low float, very low outstanding, no preferred shares, all the ideal situation. And then this stock really on no news has lost 50% of its value over the last 2 months. This is a classic January popper type chart that we're seeing here, and this hopefully is a rounding bottom. Big time buying volume, some of the highest volume we've seen in this stock really over the last several months. 120, it was like a spread when it was at this 120 level. I would say the chasers will really start coming into this puppy at $1.40, and we've got a 50-day moving average at 169 as a very nice magnet. And we also saw a positive MACD cross on Friday. Stochastics in the basement. I mean, the chart is ready to rock and roll here. Let's see if the momentum and the volume can push this one nicely higher in the near term. DRWY was a monster winner for us early in the week on Monday. We jumped into this puppy around 9 cents, ended up almost doubling for us, going up to 18 cents. Retraced like the other penny stocks Tuesday, Wednesday, Thursday. With the move in NETE and GBSN on Friday, we hopped back into this puppy at 11 cents and boom, up to 17 cents on the close, and looking great for a continuation move on Monday. Now remember, there's a reason these stocks trade down here. There's a lot of issues with them, needless to say. So keep that in mind. These aren't the kind of stocks where you put 90% of your account in them. These are trading vehicles. Just this time of the year, these kind of stocks do very, very well. And, these guys are looking to do a vote for a reverse split, but it's not for a few weeks. So we could see a nice continuation move on this one. It seems like the magnet for all these stocks that were trading at 10, 11 cents and under is 25 to 30, 40 cents plus, based on what we've seen. As an example, on what NETE did. Look at this, from 7, 8 cents to 43 cents in a week. So these stocks, when they get going, can really tear. And you can see here, big move up, dip, and then re-rally. And most times these stocks end up pushing to new highs. So we should see a nice continuation move on this stock in the near term. Other biotech stock that's ripe for a listing takeout is LPTN. Watch this one really, really closely. It's got pretty good resistance at 31, 32 cents and gives, extreme moves. Still tax sellers out there, but it's got a relatively low float. Kind of easy for them to take it over if they do want to. So these are the kind of plays that should do very, very well over the next month or so, and that's what we're going to be keying in on. So last stock I wanted to mention, of course, was Disney. The shorts have been working this one like an ugly stepchild over the last week or so, using old news. For some reason, ESPN subscriber numbers, even though they were talked about at the August conference call, became an issue again because everyone and mom who has a mouthpiece on CNBS is short the stock. So they get a vehicle, an avenue to bash it, and that's what they do. Star Wars in 2 weeks' time. I think the shorts are going to get bent over a barrel. Our options have gotten beaten up here, but we still got some time. And look what our Netflix options did The last week of expiration last month, those options went from 20 cents to $4 in the course of a week. So it can move, and it can move fast. I'm looking at the chart. We are back under to extreme oversold levels on stochastics. And the last two times we saw this on Disney, back in late September, early October, over the course of the next 2 weeks, the stock gained $8 just off that sell-off. Back in August during the market tank, let's just say 96, 95 was the low after that nonsense on the open, gained $8, $9 over the course of 2 weeks. And seeing the same thing happen this time would take us right back up to that 120, 122 level here. I'm going to have our options rocking and rolling yet again. We got a golden cross on the Disney chart 2 weeks ago, and we had a sell-off, which is typical on golden crosses. We've gone over this many, many times before, how when you get the initial cross, there's always a sell-off shortly thereafter and then a push to new highs. So I'm optimistic that we're going to see the same thing happen here. We'll really know this one's ready to rock and roll when it breaks back above the 20-day. I would say 115.50 is where the shorts need to start panicking again for that push up to 120s into the release of Star Wars. RSI looks really good. We're pretty oversold here on the MACD, and again, like I said, the stochastics look great. So I think Disney's in store for a nice little move over the next 2 weeks. That's it for the video, guys. See you all in the chat room tomorrow. Bye.